we've got Miss Shweta Rajani, Head of Mutual Funds at Anand Rathi Wealth Limited, joining us on the show. Shweta, hi. Good to be speaking with you. First up, give us your sense on the kind of equity flow picture, that a number that we're seeing at 22,907 crores in May compared to 38,440 crores in the month gone by of April. Quite a big moderation coming in on a month-on-month basis. How are you looking at this metric?
Good morning. Yes, so like we can see in the overall numbers, the net flows seen a drop from a month-on-month basis. But I would also say, the numbers that came in March and April, given that market had given an opportunity to invest, clearly investors made the best use of the flows in the previous few months. 22,000, yeah, definitely lower, but I would say this is not a complete reversal of the investor behavior. Yeah, I would put it as a cautious investment going forward that's taking place. So, it's not that the overall sentiments have been dented, but yeah, there's a cautiousness that's built in the numbers is what I would see, especially if you look at the further category breakup and you see, the impact on a month-on-month basis more seems to be in the mid and the small cap space where it looks like the investors are going, slow in that. The other thing I think for the drop in the numbers is also the NFOs, the lesser number of NFOs which happened. It could be one of the reasons why we are seeing the overall flows being lower. Having said that, the SIP numbers, I think at 30,000 plus still holds strong. So if I would look that as a check for the sentiment, and that's going very strong.
Morning, Shesha, this side. I understand that there's some bit of cautiousness that we have seen in AMFI numbers this time around, and SIPs too have seen a marginal decline on a month-on-month basis. But what will the trend look like going forward?
So, my guess is, even if you're looking at it on a month-on-month, yes, there's a marginal drop, but look at it on a year-on-year basis, you're clearly 40-50% up than the same number last May. So that clearly is showing the maturity of the investor, the retail investor who's doing your lump sum. The disciplined approach is still being followed. My sense is that if, we'll talk about the numbers same time May next year, these numbers that we're talking about, 30,000 crores today, easily could be about, 38,000 crores. An average improvement of 400 to 500 crores is very much likely going forward too, because the fundamentals continue to be, strong, even though they may have weakened a little, but on a relative basis, they are strong. If you look at the RBI household savings data, there is still an under allocation to equity. So that shift, the structural shift from equity to debt, from debt to equity is taking place and would continue to take place. So I'm, not so worried looking at this marginal dip in SIP numbers.
And Shweta, how are you looking at the restrictions that we've seen in bulk deposits when it comes to gold ETFs? The recent news flow that we're seeing, one mutual fund after the other is restricting bulk deposits into their gold ETFs. While this may have a limited impact on retail, how are you taking a look at how the institutional fund houses will now look at gold investments, and how will that affect the gold ETF number?
Honestly, we look at the gold numbers also. It's after a long time we've seen net negative flows in gold ETF, which means that the investors are also booking their profits in gold and moving into other asset classes. So that's one observation. Second, if you see, I think, overall there's a stance being made that in order for, to work towards the broader benefit of the economy, there is an action needed by every institution, every individual. And the halt on the bulk deposits by majority of the AMCs is one step towards that direction. In fact, we've also been talking to our clients and asking them to book profits on some portion of the gold that they would have had in their portfolios. So all these measures are taking into account what is good for the broader economy, and investors are not exiting at losses. They've made their profits over the last 1-2 years. So I'll not be surprised if in the next 1-2 months we would see gold flows being net negative. And while it doesn't impact retail, it helps the overall import and the currency where we stand.
So that's as far as the outlook on inflows, equity inflows is concerned. Ms. Rajani, thank you so much for taking your time out and joining us here on ET Now.